everybody, this is John, and this is going to be a very interesting video. I am in the Cayman Islands, and I am trying to balance on a paddleboard about yay far from shore, God almighty. So it's going to be a little interesting, but I just want to talk a little bit about trading. I know I'm supposed to keep eye contact with the camera, but I have got to look at these waves. But I want to talk a little bit about trading, just, you know, the kind of, you know, as a trader, and the markets are moving all the time, right? And what are the, you know, what are the times to dive in and take action? When is it time to take a break? So a couple of thoughts on that as I'm watching the waves here. I'm looking for turtles too, just to kind of see, you know, is something going to show up here? But a couple of things. The markets, you know, obviously this is you know, December of 2018. The markets are incredibly volatile. And, you know, the question is like, gosh, when the markets are volatile, do you just get super aggressive? And if you're missing out on it, is that a bad thing? And what's going on? And the thing that I've learned, oh God, hold on, big wave. If I eat it here, this is gonna be pretty funny. I'm assuming this phone is waterproof. So, and really it comes down to, you know, as a trader, do you have to catch every move? And the answer is, and this is one of those things you just don't really fully understand until you've been doing this for a while. The answer is absolutely not. As a discretionary trader, you have got to save and preserve your mental capital, okay? Because if you don't, you're gonna get decision fatigue. And when you get decision fatigue, you're gonna make mistakes. When you make mistakes, you are reducing your farm, okay? So what's your farm? Your farm is essentially your starting trading account balance. And the main thing you gotta do is protect your farm. You grow a crop on it, and then you sweep it out, right? So that does not mean that you trade every day. That actually means you sharpen the saw. You know, sharpen the saw. The question that Abraham Lincoln was asked one time was, you know, if you had 8 hours to chop down a tree, what would you do? He's like, well, I'd spend the first 7 hours sharpening the saw. And it's the same thing in trading, but the saw is your mind, right? You got to take breaks. The longer you stare at the charts, the more errors you will make. So if you're feeling frustrated with the market, oh, big wave, yeah. If you're feeling frustrated with the markets, take a break, okay? The markets will be there tomorrow. And I also, you know, during the 2008 financial crisis, which was a great market to trade, the main thing there that we did is we traded a lot less and we traded a lot smaller, okay? Once in a while, something will come together and it makes sense to do a bigger trade. But most of the time, it doesn't make sense, all right? So remember, the name of the game first is to preserve what you have. And when things are really volatile, it gets really picky. You got to get really picky with that. And if you're fried, you've got to schedule, and what I like to do is schedule regular time off. And so that's what I'm doing here in the Caymans. I'm taking, although I'm looking at the markets, they're volatile, I'm spending time with my kids, I'm out in the ocean. That is more important because I know I'm, oh God, I'm gonna fall off, sharpening the saw so that when I get back, I'll be able to look at the markets much more cleanly. Okay, so hopefully it helps. You guys have a good one. I'm gonna try to make it back to shore. Yeah, one more quick view, and there we go.